Hello, it's Dan Lesniak from the Orange Line Living Team at Optime Realty here in Arlington, Virginia. In today's Ask the Agent blog, I'm answering a question that I've gotten from several buyers recently about how they can get money to either renovate a home or build a new home. So I'll talk about each of these scenarios and a couple different options. If you're looking to renovate a home, you've got a couple different options. The first scenario is if you already own the home or if you're going to purchase it using a traditional mortgage. If you have equity in the home, you can take out what's called a home equity line of credit or a second loan. In both of these scenarios, lenders will typically give you a combined loan-to-value ratio of 90%. That means if the home's going to be worth $1 million, you can have a total of $900,000 in loans on it. There's two types of this kind of loan. The first is a HELOC, that's a home equity line of credit. This is a revolving debt, so it kind of works like a credit card. So if the bank approves you for $100,000, you can use that $100,000, do some renovations, pay it off, then take money back out of it and use it for something else and then pay that off. So it's kind of like having a big credit card, and you can use the money for whatever you like. The other type is just a fixed loan where they give you a certain amount and it amortizes over a certain period of time, 10 years, 20 years, or 30 years, and you just make fixed payments and pay it off. So those are both options. The other thing you can do if you already own the home is a cash out refinance, where you refinance the entire home and cash out a portion and use that for your renovations. So let's talk about the scenario where you're purchasing a home and you intend to renovate it. In this scenario, you can do what's similar to a construction loan, where you get money from the bank to purchase the home as well as to do the work. So let's say you're buying a home for $600,000 and you want to do $200,000 of work to it. The total would be $800,000. The bank's going to base your down payments off that total level. So typically you'll have to put down 20%. In that case, $800,000. So the purchase price plus the amount of renovations you're going to have to do, and then they'll pay your contractor in draws, monthly draws or on a certain time schedule that you've worked out in advance. And then at the end of that process, it can sometimes convert to a different payment structure. So sometimes these loans start off as an ARM and then can convert to a fixed, or sometimes it can just be a 7-year ARM over a 30-year amortization schedule. So there's a couple different scenarios that you can do in that situation. All right, now onto the new construction financing. So a typical construction to perm loan is when you purchase the land or the old house, and the bank gives you money for that, and then they give you money to build your new home, and there's a draw schedule, and then at the end of that period, when the home's done, it converts to a permanent loan. So in this example, let's say you're buying a lot for $500,000 and you're putting $500,000 of work into it. When you go to close, you'll put down typically 20%, sometimes more, sometimes a little less, but you'll put down 20% of the total amount. So in this case, you put down 20% of the $500,000 for the land and the $500,000 for the construction. So 20% of $1 million would be $200,000, and then the bank would give you the money to close on the loan and then pay your builder or contractor on the draw schedule as they're performing the work. When the work is finished, sometimes there's different types of construction to perm loans. Sometimes they stay at the same rate. Sometimes they start off as an ARM and then convert to a fixed. So there's different ways that these can be structured. And that's the main way that people do construction financing when they're building an entire new home. The other two types of programs I'd like to mention real quick are, or make you aware of, is that it is possible to get renovation or construction financing through the VA. It's also possible to get renovation financing through the FHA in what's known as an FHA 203K loan. If you have any questions about any of these, because I know I just kind of hit the basics, please feel free to give us a call at 571-969-7653 or shoot us an email. You know, we'd love to get more specifically into how this might affect you, because it's a little bit different for everyone, but I was hoping to give you just a quick overview of all the different types of scenarios out there.